Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the first day of fall, September 22nd, 2020 at 6 p.m. Central Time. So as we look at the markets, we're still under pressure in the metals. Today was turnaround Tuesday day for the stock indices that were weak on Tuesday went up. The NASDAQ had another up day. You'll see that in a moment. In the dollar index, a stronger day as most of the currencies were under some pressure throughout the trade day. And in the energy markets, I just saw the API numbers. Net draw of about 7.5 million barrels. That's not an overly bearish number, but because the crude saw a build of nearly 700,000 or so barrels, little early pressure in that market. It's what's giving the repo gas a little bit of a bid. You're also backing off in the bonds and notes. So the panic that we were seeing with that Monday break in the market, it's pretty much out of the marketplace. It's looking like this. Are you going to break on me again? What's going to happen here? But we know what's going on there. The other event of the day is we had Treasury Secretary Mnuchin and Fed Chair Powell speak before a House committee today that was on for about 3 hours. Mr. Powell speaks again tomorrow, and then the two of them on Thursday one last time. They're answering a lot of questions about COVID, and simply put, Congress needs to do more. They're saying it. You listen to what they're saying, and the answers you're getting are these two can't solve the problem without Congress. That's it. It's not politics. Listen to what they're saying. Forget that I'm saying it. I have no political stake in that. Listen to what they're saying. In the S&P, we continue to slip back. For the week, we're down 1.7% so far, down 59 handles. Points are what we call that. If you take a look at the chart action, it's still one. There's nothing here that to me looks overly friendly on the chart. You still have a pattern of a higher high and a lower low, sort of caught in this wave to the downside. The market has not hit the 100-day or the 200-day average. So why did it find any support here? Well, the number you look at is the lower Bollinger Band. And markets that hit Bollinger Bands the first time on a big swoop to the upside or downside often run into resistance there because the Bollinger Band is an algorithm that will adjust to market volatility. There's a formula. You can go on Investopedia, you can go on our website and our futures trading kit. We teach all about it. But it adjusts to the market, and a lot of the systems, be it the algorithms, trader systems, individual traders, they'll look at that and say, okay, if 95% of the time the market's going to trade within the bands, and you had a big break to it, that takes the gravy, how's that word, off the table. Doesn't mean you can't go lower. The first challenge, though, is often where you get a bounce, be it to the up or downside. And, you'll say, well, here it kept hitting it, and I'm agreeing. But then you have another tool. You're looking at momentum. So when you tie the layers of the tools together, you get to understand what they're doing. When momentum locks in, there's nothing stronger. Nothing. Momentum just takes over the market. Well, you don't have that here. You have an oversold market that's got a higher high, lower low, sort of bouncing around market. That's the word I want to use. In the NASDAQ, a nice bounce, but it didn't change anything on the chart. You still have the lower highs, the lower lows. What I admit the market has refused to do, and it's not done this in months, it doesn't want to hit the lower Bollinger Band. I don't think it's hit it since March. You hit it in XLK if you're a spider trader, but you haven't done too much right here. The resistance of the market now, 11,442. You'd have to take out this high, and when we look at it, the high of this is 11,539 to break the pattern of lower highs, lower lows in the chart. Oversold, easy money might be out of the market for the moment. Got to see what goes on. In the Dow, the first challenge of the lower Bollinger Band has caused a bounce away from it. No surprise again. No trend either here. Lower high, higher high, lower low, and oversold. I'm content being an observer in markets like that. In the Russell, you have the higher high, the lower low. That's why swing lines are so important. They start telling you what's going on in the market, and then you use the filter where you're at of the 18-day average or other moving averages with momentum, and you decide, is this worth my time and effort in the marketplace? Not every day is a trade day. If you think it is, best to you. The VIX, sideways. You're in a big, broad swoop here. Do you see these bands? They're just flat, and you're just sort of drifting within them. But you have an embedded reading. Embedded means that when the market sees two numbers that make up the slow stochastic study. I was thinking about it there. They're the K and the D numbers right here. When those two numbers are going sideways under 20 and locked in for several days or more, it means that on the rallies, the pros are selling, in my opinion at least, until the red line closes back over 20 and you're looking for the objective. What's been unique in the VIX cash, this market, is each time you've hit the lower Bollinger Band, if you go back, over a year, you're going to see a high probability from there you get back to the 18-day average in fairly short order. So it's something to keep your eye on for different trading philosophies. You're not at that point there at this one. In the T-bond market, you're in neutral land. You've got a pattern of lower highs, and I could probably argue lower lows, but you're right on the 18-day average, and momentum is flat. I don't see anything out of that. In the 10-year note, I can argue a lower low and a higher high. I can't make out the pattern on this one either. I could even argue if we come here, this high was 139.23 and a half. This one was 139.24. So I could argue for the moment lower highs, but I don't know if I have higher lows or not. And when I can't see it on the swing line, and that's what it's developed for. If it's not there, it isn't there. Don't go making up your own rules. It's just not there. In the dollar index, this is a resistance zone. You're at the upper Bollinger Band. Each time recently you've gotten there, the market has faltered. It has pulled back towards that 18-day average. I am not bearish, but I can also give you reasons not to be bullish right here. Convert these readings where they're both going over 80 for 3 days or more, I'll get bullish. Right now, no. I think this is where the smart money's taking something off the table. Flip-flop it on the eurocurrency. You're not embedded, you're oversold, you're trying to ride the lower Bollinger Band. I see that. And if you can do that convincingly and lock this in, there's more to be had here. What if I tell you it could be a surprise for traders? Are you looking at the 115 level possibly in that market? This would be a trade that would capture a lot of the banks and so on that I saw that had written reports. And I read those bank reports as to what they think the currency is going to do in the latter part of the year. They do it quarterly often, where they have been basically bullish the euro, bearish the dollar, but the COVID is changing things. Now that you got the UK, Spain in serious trouble with all this, even Germany's had some problems. Now the question is, where are we? We don't have the next spike. Although I think there's 35 states that are now on our quarantine list. You know, we don't talk about that. Propaganda, I don't know, but we've got a lot of problems. So we hit 200,000 deaths as of today, according to Johns Hopkins. That's the largest in the world for a country due to COVID. Lower highs, lower lows, certainly no reason to be long. I think you'd agree with that. I'm questioning, do I want to sell a market that's that much down? And you're at a key number in the British pound. Now you're back to the 100-day average of closes. This has been an important number. It has restrained the market at different times. You seem to be playing around it. Let's assume it gives ground. Look for the lower Bollinger Band. If it has support here, we'll find out. Both numbers are here. Do you see this? Under the Bollinger Band. So you can't count today, but Tuesday both under 20. Yesterday they're under 20, not Friday. Tomorrow's going to tell us if it embeds or not. You know, as I cover all this, it also dawns on me that for a lot of you, no matter what you watch, you're looking for market information, for research, ideas on spreads, ideas on futures, longer term. Not everything's a short-term trade. Example, on the weekend, I put out for my subscribers only weekend videos on 40 charts in futures. And I give them very specific. These are your longer-term trades. It is not for the person worried about the day-to-day noise. That's not right for everybody. And the reason is sometimes you don't get trades off that don't have larger risks. So it's a question of what you're trying to accomplish. We cover this in great detail. We talk about it and we write about it. How do you get to some of this information? Well, go to our website. You'll have our free offers there. If you haven't tried a trial to my videos and so on, you can get that, the subscriber videos as well. And of course, delivered into your mailbox, our research. I'm Ira Epstein. Thanks for listening. I will see you all tomorrow.